And Christopher, welcome to F.A.C.E. Really nice to meet you. Waiting to hear you. I see. Okay, unmuted now. Can you please unmute, Christopher, if you can hear me? I still show you mute. I'm asking, you need to unmute, buddy. It'd be on the lower left-hand corner would be your mute button. Waiting for you, Christopher. Who's sharing right now? Velu, can you unshare? Okay, Christopher, I thought maybe you'd been in Zoom before. Was looking forward to talking to you. What a great day to talk to a hard money guy. With the metals flying today after the Fed. I don't know how to assist you. Can you text me something, Christopher, and tell me what your problem is, what the issue is? Maybe I could unmute you. Christopher, going once, twice. Velu, can you stop sharing? Maybe that's the issue. I wonder if I make you co-host. Okay, let's try this. Christopher, can you hear me? Okay. All right, it looks like we'll have to reschedule this.
Hey, Dale, you there?
Oh, yeah. Hi, Christopher. How are you?
Hey, there we go. I heard you guys still going a few minutes ago. I thought I'd give you a few minutes to finish up.
Oh, okay. Well, so you walked away. All right. Bueller. Anyway, Christopher, great to meet you. Welcome to F.A.C.E.
Thank you, Dale. Great to speak to you.
Okay, so you want to share your screen? You ever used Zoom before?
Yes. Let's see.
Okay, it's that green box. Nice action in the PMs today, huh? I know you like that.
Yeah, it is. Let me see. Let me share this. Can you see my
got
screen
it.
now?
Yeah, have
You see all the charts there?
Yeah, nice terminal wedge on that. What is it though? CRB, okay, CRB, US dollar. I don't know what you have above it. Another
Yeah.
terminal
So
wedge.
where do you want to start? You want to start with the
Well, you know what?
metals?
I want to start with what was your entree into the investing, trading, consulting market industry? What were you doing beforehand? And tell us a little bit about your journey, and then we'll get to the markets.
Yeah, sure. I was in military intelligence for my first
Oh,
career.
I saw that you were you were in charge of drones.
Yes, that's correct. Yep. And it was a
Okay.
pretty hot issue over the last number of years, but anyway, spent some time in Iraq and Afghanistan. And, when you see that happening with your own eyes, if you're an independent thinker, that leads you down some other paths
Rat,
of, yes,
rabbit
exactly.
holes.
Yeah. Well, you start to, even as a patriot, someone who loves this country and loves freedom,
Yeah.
you start to observe that the amount of waste happening overseas in the unwinnable nature of the wars was unsustainable. And then you start to look at who's responsible. How is this being allowed to continue on
Yeah.
financially? And it leads you to the Federal Reserve. It leads you to the study of fiat currency. It leads you to precious metals.
And the military industrial complex that
Exactly right.
Eisenhower warned us about. I mean, I recently watched Tom Cruise again. It's a bit depressing, the movie Born on the 4th of July. But so what you experienced in the Middle East, our soldiers have been experiencing for years. A lot of Vietnam vets went through the whole thing. If you watch a movie, Tom Cruise was, middle America patriot, ready to lay his life down for the country to stop the domino effect of Vietnam falling to communists. So,
Yeah.
yeah, and you were going to stop terrorists from, hitting our home shore again, and
Yeah.
which they never did. So, I mean, maybe
Yeah.
we were successful in some way. So
It's
yeah,
it's
so
true.
you look at this and it led you to gold. I'm curious, what is I gold? Does it have something to do with an internet form of it, or
The I
just
stands for independent, fully
okay,
independent of all dealerships, all companies, all other firms out there.
okay,
Able to speak my mind, in other words.
yeah, okay. So when there are times that you don't think gold is a buy, that it's going to get cheaper, you don't have to pound the table and say, this is what gold guys say. Have you ever heard
Correct.
this?
I have no
Don't
problem saying.
wait. Don't wait to buy gold. Buy gold and wait.
I have no problem saying what needs to be said, whether
Okay.
it's higher or lower.
Okay. All right. So, why don't you give us your view? Dollar under pressure. Fed. Still trying to be as dovish as possible. Silver has been up until today underperforming. Why don't you
Yep.
just tell us what you're seeing in the charts and your interpretation of it, Chris?
Yeah. Thanks, Dale. So the big, I mean, you got to separate sort of intermediate term with long term trends that are clearly visible. And so, for example, the chart that we're looking at right here on the bottom in green, this is the dollar index. The last 20
Yeah,
years of the dollar index. And you can see there's clearly a rising structure to the dollar index going back from the lows in 2008, functional double bottom here, 2008 and 2011. Clear rising structure, with strong horizontal support here in the 88 to 89 region. But if
yeah,
you notice here, just back about 1 year ago, the structure of that rising channel broke down.
yeah,
And so according to our model here, when you have a multi-decade rising structure like this that breaks, it doesn't necessarily mean that the market has to collapse immediately, but it's showing you that this market is in the process of shifting. You have a 10 to 12 year rising channel. You could then have as a net sum here from 2015, let's say, extending out into the mid 2020s, range bound, and then you expect this thing to roll over middle or later part of the decade. And then if you just come up with me, and we're looking at the exact same time frame here, I have these on same time, separate charts
yeah.
here. You look at the CRB commodity index, and you just see, now it's not a mirror image, but it is a separate significant um, bottoming pattern. So you had a rising pattern, and then what's developing into a breakdown in the dollar. You
I
had
was
a
thinking on your dollar chart. Sometimes a lot of markets will come back, Chris, and retest the breakdown. And
totally right.
if we rallied to the trend line that we broke down out of, it looks like about 96.
Yep.
That's kind of what I'm looking for during this bear market rally. It's a nice look. It kind of reinforces what I was thinking in my own charts, that we could
This
get
is
to
exactly
96.
what I'm. This is exactly what I'm anticipating to happen here over the next, 12 to 18 months. Is a bear market rally in the dollar come somewhere up here around 96. I mean, and sometimes on these long term charts, you will even hug the lower boundary of the trend line for,
Yeah.
for a while. That could come up even to 98 or something into next year. And so, but the bigger picture though is if you look at, so that was a rising structure that broke
Right.
down in the dollar. You can see that. Anyone who's not looking at this is just flat out ignoring the most visible trends that are available in the market. You look at the sum of the commodity complex here now, where my mouse is, and you're looking at from 2008. Notice 2008 matches the low in the dollar. So
Yeah.
2008 was the high in commodities. And
Yeah.
you had it wasn't a channel, it was a major terminal wedge. You're talking a 12-year terminal wedge, little false breakdown at the bottom. And look,
Yeah.
this thing is now breaking upward. Now, the
Yeah.
thing is that after you have a 12-year bear market, so this is where we get into from long term, where I think commodities and hard assets are bottoming. And maybe we'll talk about gold and silver in a few minutes more specifically. But you go from long term, where commodities are breaking a bottoming pattern, to more what should be expected, though, as this is going to play out. You don't go from a 12-year bear market to a bull market immediately. This thing is not just going to keep going higher in a straight line like that.
Yeah.
Somewhere in here, it looks like in the range of 200 to 230 is a pretty good resistance level. You had that peak back from 2015. You got the 38.2% fib retracement up here at 244. So we're in the window here for a peak to form. And then I think this bottom, which represents the last part of the terminal wedge going all the way back to 2015, I think these kinds of waves, you have these 1 to 2 year waves every couple years. I think we're going to get another few more waves like that here. Let's call it in the 150 to 230 range on the CRB,
Yeah.
extending into the middle part of the decade. That entire thing is going to represent a giant bottoming process. It's
Yeah.
just that it takes some time. You don't just like the dollar is not going to, once it breaks that trend, it's not going to
I don't think
collapse.
it's going to take as much time as you think. I think it could be by the end of the year. The things
Interesting.
that you're talking about by mid-decade, I think could be by we could get a commodity correction, which is already underway, completed by the end of the year.
Yeah.
Don't you think that the commodity correction will end when the dollar takes out after the dollar rally is over? And I don't think that's going to take that long for the dollar to, rally up to your point and then start to roll over again. So maybe mid-decade, but I'm thinking things kind of speed up in this world. Um,
They do. Yeah. The only reason why I'm looking at a cycle potentially like that is if you look at these cycles here in the dollar,
yeah,
2015 to 2018, that was a 3-year cycle. 2018 to 2021, that was a 3-year cycle. So I'm wondering if this is going to end up being basically a lopsided head and shoulders, where the upside of this rally is about a year to a year and a half, and then the downside is a year to a year and a half, and that forms like a three-headed top here.
okay, all right. So who taught you charting? Are you self-taught?
Self-taught, yeah. It's I was a cartographer when I was working on the drone program, and
Yeah,
specifically relaying pattern of life analysis from the drones to the military commanders, in real
yeah,
time.
yeah,
And I basically um, had to annotate things for the military leaders in just a very clear, what's the bottom line? What do we need to know? What are the important things? We don't have all day to talk about extraneous stuff. What are the key takeaways? So I apply that to the financial markets.
okay, all right. And I like your charts. So okay, we have commodity prices covered, and the Fed can't print corn. So we
Yeah.
know if we have food shortages and food insecurity, there's really nothing the government could do about it. It's about Mother Nature, God growing and competing with the Chinese for grain stocks. So
Yeah.
um, what else? What else you seeing here, Chris? You have some charts beneath it that you want to show,
Yeah,
or
we'll just talk about a few other things. If you're following this kind of thing, if you can understand that in commodities themselves, we are whether this correction is going to be only a year or whether there's a few waves to come in here. Either way, if this is a long-term bottom that's setting up, I am very involved, and I think investors should really consider the small cap commodity producing companies, which are mostly listed up in Canada on the venture exchange. And if you just look
Is
at
that
the
in Vancouver?
similarities, I'm sorry.
Vancouver, the venture.
They're either Toronto or Vancouver. Yep.
Okay. And are
Yep.
these exploratory mining companies?
Either exploratory or development stage. Some of them
Okay.
have defined deposits and they're working to advance those.
Okay.
And so the Canadian Venture Exchange Composite, which is what we're looking at here on the top, this is it. This is the entire history of this since inception in
Is it
'99.
an ETF, Chris? Can
This
you
is not
trade
an
it?
ETF. That's it,
Okay.
it is not. That's the hard thing about this. There is no ETF that tracks
Okay.
these companies. Most of
Okay.
these companies have market caps of less than $50 million.
All
So
right. So they're micro caps.
they're micro caps.
Okay.
And I just want to suggest that what I am almost exclusively involved in these days, as far as how I'm allocating capital myself, is
Yeah.
in private placements in the commodity developing companies here, where not
Wow.
only are you trading futures, let's say, or options on the commodities themselves, but you're getting something that gives you free warrants also. Every time you do these private placements, you're getting free warrants. And if you just look at the similarities between the CRB here, 12-year terminal wedge, Canadian Venture, 12-year terminal wedge, this is no
They
random
look
coincidence.
identical.
It's for all practical purposes identical. And what I always say to people, whether you're talking CRB or Canadian Venture, when you have an index that fell by, what is that, 85%,
Yeah.
it cannot go to zero. An index is never going to go to zero. You have taken out so much of the risk here. It's not even funny.
Yeah.
So
I like it. And since you're self-taught, you're gonna have to go through a pop quiz right here, Chris.
let's do it.
All right. What is the normal or the rules for wedges? How much do they retrace?
Oh, in my experience, the most bullish wedges will break and then never actually give you a proper retest of the upper boundary of the wedge. That's the most bullish scenario. The most conservative scenario is what we've seen here in the venture, where you get not only come back to the breakout point, you
Yeah.
actually get lower retests. But the key is that
Right.
the boundary of the upper resistance zone never gets violated, even though you're actually lower than the breakout point.
Right.
It's
So my
it's
question is, what's the upside potential now that we've had breakouts out of these wedges?
Oh, I mean, you could come back to the former. We will come back to the former all-time highs.
Well, that's a
Both.
rule. Okay, you get a smiley face. That wedges can retrace 100% of the move.
Oh, absolutely. And
Okay, so
yeah, absolutely.
that's what I teach.
There we
So
go.
okay, so I mean, you're talking about massive gains over the next 5-10 years if you get properly positioned for this.
That is right. I'm
Okay,
super excited. This is just simply what I'm doing with my money and with our firm, and we're looking for value in hard assets. It's tough to buy a futures contract and hold on to that for 5 or 10 years. You know what I mean?
yeah,
But if you've got some assets in the ground that you can get shares in, and you got to diversify properly, because even in a rising market, some of these companies are going to end up going under. It's just how it
yeah,
works with these micro
yeah.
cap companies. But if you diversify into 10 different companies and you're picking up warrants also for free with every deal you do, it's just it's
And
there's life changing potential.
the illiquidity of a private placement. I mean, I always ask myself, if it's so good, the deal's so good, why are they offering it to the public for private placement, which is completely illiquid? You really have to have confidence in it, and it should be, don't you think, um, Risk capital to go into a private placement?
Absolutely needs to be risk capital. Yeah, it's very
Yeah.
different from physical precious metals holdings,
Yeah.
which I would consider like a savings account or an
Yeah.
emergency fund. This is
Okay.
risk capital for sure.
Okay.
This is like
All
you
right.
want to try to hit a home run capital, but you could afford
Right.
to part with it.
Right. Okay. I appreciate that. We have a couple
Sure.
minutes left if you want to discuss anything else.
Yeah, so here's why I think a cyclical correction, though, is coming up first. And you can see it now. I don't think this is going straight higher. And so if we look, for example, at silver, I've
Okay.
changed over here to the, let's see. Okay, so we're going to look at, this is the silver miners on the top. This is an
Yeah.
ETF.
Yeah.
And this is the price of silver bullion here on the bottom, same time scale, late 2015 through the present.
Yeah.
Notice that silver had gotten almost $10 above its 2016 peak here. Notice
Yeah.
this.
Yeah.
Whereas the silver miners were below their 2016 peak the entire time. And so now if I go to my actual spot, this is my trading platform, my actual spot silver chart, and we want to look back, let's say the last year and a half. Unfortunately, this triangle here in silver has just broken down. You can see that right where my
Yeah.
mouse is.
Right.
And if we zoom in, right now we're getting that second retest of the broken trend.
What are you
So
looking for? 22 back to support?
yeah, I would be looking at least for 22. However, the measured move for an amplitude like this subtracted from the apex is down at 18.5.
Okay.
So worst
God,
case
I'll back up
scenario
the
is,
truck there.
yeah, oh yeah, this would be a total back up the truck. And if you want to talk about how that looks on the super big picture, there we go. You know, it's basically you'd be coming back to retest this final part of the channel of the bear market. You'd be coming back somewhere in here. Whether it's 22, I mean, this pattern could stop at 22. Whether
Yeah.
it's that or whether it's 18, either way, we're going to have really good accumulation opportunity in there. But I do want to sort of warn people that it looks like you read the message here of the silver miners that refused to break upward. You look at the break in that triangle and silver itself. You know, we could have 6 to 18 months of weakness coming up.
Okay. All right.
Um,
Let me see your SILJ, the junior silver miners. I saw you pass that up a
yeah, we had that back
second
there.
ago. Okay, there you go. All right, so
So
that's
same,
already broken down.
it's
Yeah.
broken down, and you're getting a retest there. So I think
Be a
there's
great buy at about $8, huh?
yeah, exactly. You
Eight,
do a
nine
measured
bucks.
move of this consolidation here below the breakdown point.
Unless we negate the breakdown here, Chris, in the next week or so, what if we start trading above the breakdown line?
Hey, nothing would make me happier from the intermediate perspective. That
Yeah,
just means you jump back in with both hands
right.
now. Like as soon as we get
Because
2
you've
weekly
seen those
closes.
before, right? False breakdowns out of
Oh,
trend lines.
absolutely,
Okay.
absolutely.
All
Nothing
right.
would make me more pleased for the short term. It's just I like to stick with the visible bias until proven otherwise.
Okay. Well, I'm really glad I reached out to you on Twitter, and what an interesting journey you've had, and you have a lot of conviction. And if you want, you could show your website. I went there for to kind of check you out, and the best way for people to get in touch with you and follow your
Thank you, Dale.
work.
Yeah, I
Yeah.
appreciate that. So the website is the letter I and then goldadvisor.com. We do weekly videos for subscribers that are similar to the interviews we're doing now, but a lot more in depth every single week. Flash updates, all that good kind of stuff that goes out to you.
Okay.
One other thing, Dale, I thought I would show you. I think this is really interesting. If we want to switch to the Euro USD for a second,
Yeah.
if we just have 2 more minutes here,
Yeah,
I
we
don't
got
think
it.
many people look at this. I want to show you the super long term perspective on Euro USD, going back 1975. So remember, even if we're talking about, I mean, and so Euro USD is mostly going to be inverse of the dollar index.
Right.
But so even if we're talking about, let's say Euro USD needs to come back here and retest this broken blue trend, look at the
Yeah.
big pattern here. This is from, the late 70s. This
Yeah.
thing is gonna
That's when it was a
only get
Deutschmark, right?
exactly right. So you've got Deutschmark superimposed over
Okay. Yeah.
over euro here back before 2002. But if you look at it, I mean, what is this? Relatively flat resistance,
Uh,
rising support.
yeah.
This is a 75-year ascending triangle in euro USD.
Yeah.
This
Okay.
thing, at some point in the early to mid 2030s, is my best guess, is going to break upward. And then you're going to get a target of somewhere around 220 euros, $220 to the euro.
Wow. Okay. I could see it. I could see new highs anyway. So, great interview, Christopher.
Thanks, Dale, very much for having me.
Yeah, we'll do it again. What do you say?
I'd love to. Just
And
let
you
me
know
know.
what? You know that since you and I had no doubt you would survive an interview with me, considering your history. But and this probably fits you more than most. You're now my trading warrior brother.
Hey, thank you, man. It means a lot to me. And maybe on the next interview, we can get into a little bit more of your history as well. I'd love to hear more about your background.
Okay, well, you could always interview me on your website if you'd like.
Okay,
You
good
know, I'm
deal.
open. Turnaround is fair play, right?
Absolutely. Yep.
I go either way on a mic, Chris.
Okay, good.
Only a mic. Okay.
Yeah, I hear you.
All right. So good hunting. Thanks so much for your time today, Christopher, and I'll be in touch with you, and we'll set up a follow up date for the fall. How's that?
Okay, sounds great, Dale. Thank you very much.
All right, everyone. Uh, Christopher Aaron, and you can check him out on Twitter and also on his website. And looks like he has some people that he works with. And if you're a hard money person, looks like it's going to be a nice website for intelligence gathering. So that's a wrap for me and you guys. Remember, don't just count your coins or your bars or your bags, count your blessings. And we'll see everyone to wrap up the week for TGIF. Thank God I found ForexAnalytix. And you could join the guys in 15 minutes for Morning Edge. Adios. Thanks again, Chris.
Thank you, Dale.